morning, everyone. My name is E.PC and co-student of Mawuko Girls Senior High School. I'm an investment banker and I currently work with Fidelity, Treasury and Markets units. I'm here today to congratulate our ladies for coming this far in the National Investment Quiz Competition. I'm also here to wish you all the best. Go for gold, be confident. I also want to use this opportunity to thank Dr. Aggrey for training the contestants and for also teaching me in my days in Mawuko Girls School. Thank you so much. God bless you. Go for gold. Good morning, everyone. My name is E.PC and co-student of Mawuko Girls Senior High School. I'm an investment banker and I currently work with Fidelity, Treasury and Markets units. I'm here today to congratulate our ladies for coming this far in the National Investment Quiz Competition. I'm also here to wish you all the best. Go for gold, be confident. I also want to Good morning, everyone. My name is E.PC and co-student of Mawuko Girls Senior High School. I'm an investment banker and I currently work with Fidelity, Treasury and Markets units. I'm here today to congratulate our ladies for coming this far in the National Investment Quiz Competition. I'm also here to wish you all the best. Go for gold, be confident. I also want to use this opportunity to thank Dr. Aggrey for training the contestants and for also teaching me in my days in Mawuko Girls School. Thank you so much. God bless you. Go for gold. Good morning, everyone. My name is E.PC and co-student of Mawuko Girls Senior High School. I'm an investment banker and I currently work with Fidelity, Treasury and Markets units. I'm here today to congratulate our ladies for coming this far in the National Investment Quiz Competition. I'm also here to wish you all the best. Go for gold, be confident. I also want to use this opportunity to thank Dr. Aggrey for training the contestants and for also teaching me in my days in Mawuko Girls School. Thank you so much. God bless you. Go for gold. Good morning, everyone. My name is E.PC.
This is our third time actually participating in this quiz, and due to our previous experiences, we've been able to go back, do our homework well and our corrections, so we are coming back stronger and better.
I think last year we were actually very good, but yesterday we got to quarterfinals, so that means that there were some amendments that were needed, and I think this year those amendments have been done.
So Accra Academy are two-time champions. St. Louis are quarter-finalists and I think semi-finalists as well. Does that bring any nervousness?
No, it's just really past glories.
Preparation-wise, we know we've done our best. We have done drills. We have put in a lot of commitment and dedication. And we also know that horses are prepared for battle, but victory is of the Lord.
Which school do you want to qualify to come and meet you?
Any school that's worthy of facing St. Augustine's can come.
Other schools may think of maybe undermining and all others, but I want to say that this year we are in for the best.
Oh, our expectation is to enjoy from it and learn as well. And also we are here to surprise our alma mater and ourselves. Besides, we came here for an agenda, as our teammates will say, agenda.
We expect that the old boys will give us their support, and we expect the fans to watch out for us and keep praying for us.
This year, what pot are you in? Are you in the same pot with Butchie? No. But would you have loved to be in the same pot with them?
I would have loved to be even with the defending champions. I see all the schools to be good and can be competitive, but as you all know, Infantry is a school, so I don't think they can compete with us.
You're not afraid of any school in your pot?
It's not about the name of the school.
Okay.
Yes.
It's about what?
It's about what you bring on board.
Last year when we came, performance wasn't as expected. So then this year we are hoping that by God's grace we'll be able to get the ultimate and take the trophy back to Ashanti region.
We're ready to surprise everyone here. And we don't want to disappoint our school. We want to bring great respect to our school and show everyone here that Corpus Christi is one of the best schools in Ghana.
So the thing is, in God's time, the right things will happen.
He makes everything beautiful.
Well, with the past competitors, The only setback they had was time. They didn't really have ample time to prepare for the competition. So most of the time it was just impromptu training, but this time we've had enough time to prepare.
From my experience in different extracurricular activities, I've learned
National Investment Quiz. The NIQ is designed with one clear mission, and that is to educate and empower the public, especially the young ones, on financial literacy and investment education. It is an initiative proudly organized by the Young Investors Network in partnership with the Ghana Stock Exchange, the Central Securities Depository, and Absa Bank. Today's session is not just about answering questions. It is about deepening your understanding of investment, education, and financial literacy, as well as strengthening your knowledge or strengthening the knowledge you need to navigate the world of finance. With that said, let's get ready for an exciting, educative, and impactful contest. Thank you. So for this round, which is round 1, each school will have 7 questions to answer. And correct answers attract 3 marks, and a bonus answer attract 1 mark. You need to listen and pay attention. So we're going to start with round 1. And round 1 is based on financial knowledge. So this round assesses your general knowledge as contestants in finance and investment, covering foundational concepts such as money market, financial terms, savings, markets, and basic investment principles. It enhances or it ensures participants have a solid understanding of essential topics before progressing to more advanced rounds. So get to understand that this round is to test your general knowledge in finance and investment. It is also to reinforce your key financial investment concepts, build a strong foundation for higher level analytical rounds, and also promote practical understanding of how financial system and the market work. So without wasting much time, we start with the first question. So round 1, question 1, to Adisadel College. Define a primary market and explain why a company in Ghana might prefer issuing shares there instead of taking a bank loan.
So a primary market is a market where a company issues his initial shares, public shares in order to raise capital. And also, the company issues the shares over there, prefer issuing the shares instead of taking the loan, because with the loan, it comes with high interest. Yes. And on the primary market, so they can raise capital easily since investors are willing to buy shares. Yes.
Who pressed for the bonus?
It was a mistake.
4.
What
That's
was a mistake?
Aggrey Memorial.
It was a mistake.
Is that?
It was a mistake.
Is that?
It was a mistake.
Mistake.
Yes. But is there a bonus?
All right, so Adisadel, you are correct. So it's 3 marks. Mawuko girls. Mawuko Mayo, right? All right. What is a money market? What is a money market mutual fund? And why must it outperform a normal savings account during periods of rising short-term interest rate? What is a money market mutual fund? And why might it outperform a normal savings account during periods of rising short-term interest rates?
So a money market fund is a place where you can get your short-term liquidity, and why it can outperform savings. And why it can outperform savings is because with the money market fund, since it's for short-term, inflation won't affect it that much, so you can easily get your funds intact.
Come again.
With the money market, it's for short-term liquidity. And why it outperforms the savings is because since it's short-term, inflation won't affect it that much, so your savings, your monies are intact in there.
All right, so I'll give you 2 out of 3. The reason why it might outperform savings account is because the interest or the returns that you get on it adjust immediately to rising T-bill rates. Okay, while savings account rates usually adjust slowly or not at all. Okay, so once you know what is T-bill, right? So once the T-bill rates rises, you have more returns on your investment. Okay? All right. Wesley Grammar. Explain why owning shares in a listed company exposes an investor to both market risk and company-specific risk, using a Ghanaian example. But we are in Ghana, isn't it? So there's nothing wrong if you use a Ghanaian example, right?
So owning shares exposes a firm to market risk and company-specific risk in the sense that for the market risk, it affects the entire market, including interest rates and share prices. And for the company-specific risk, if the company doesn't perform well, the shareholder is likely to lose, if not or most of his investment. And an example is owning shares in a listed company on Ghana Stock Exchange, like Access Bank Ghana. If interest rates fluctuates, the share prices might fall. And also, if Access Bank doesn't perform well, the shareholders...
Aggrey Memorial School. Why does inflation pose a bigger threat to long-term savers than short-term savers, especially in Ghana?
So inflation reduces the purchasing power of money. So if you save your money for long term and then inflation rate increases, it means the value of your money will fall. And you won't be able to purchase the quantity of goods you could have before. In the Ghanaian context, example, if you save your money for like 5 years and then inflation rate increases by 8%, it means the quantity of goods you could have bought before the 5 years was up will not be the same after the 5 years.
All right, so you see, the question is in twofold. That's why I said long term and short term. So I was expecting you to compare the long-term effect to the short-term effect, right? But you only talked about the long-term effect, right? So it's 2 out of 3. Adisadel. Amma invested all her money in a 5-year fixed deposit. 2 years later, she suddenly needs cash for a medical emergency, but faces a penalty for withdrawing early. Which risk has occurred, and how could it have been prevented?
Okay, so the risk that has occurred is liquidity risks, and also it could have been prevented when Amma had diversified her portfolio by investing in short-term funds.
Correct for 3 points. Mawuko girls. What is a stockbroker on the Ghana Stock Exchange? And why can't investors buy shares directly from the Ghana Stock Exchange?
So a stockbroker is an individual who is an agent who trades in, who acts as an intermediary between the investor and the Ghana Stock Exchange. He or she helps the investor trade on the stocks listed on the Ghana Stock Exchange. And the second question was, why can't the investor invest in the Ghana Stock Exchange directly? This is because
buys, not invest. Why can't the investor buy shares directly from GSE?
So the investor can't buy shares because it might create because the investor is not licensed, so buying it there might cause some risks for him.
Correct for 3 points. So the stockbroker is a licensed intermediary, and Ghana Stock Exchange only deals with licensed agent. So as an individual, you can't just go and buy and trade or buy shares. That's correct for 3 points. Wesley grammar. Define the term NAV per share and explain why a mutual fund investor must understand it before buying units.
So net asset value is defined as the per unit value of an underlying asset, and it is calculated as total assets minus total liabilities all over number of outstanding units. And an investor must understand the net asset value before investing, because it will help him, before investing in a mutual fund, because it will help him to know the value of each asset in his portfolio.
I'll give you 2 out of 3. So knowing your NAV helps you, one, to know the price you are going to pay, and also allow you to track the performance over time. Okay? All right. Aggrey Memorial. Explain how political instability can affect an investor's portfolio, even if none of the companies they own are directly involved in politics.
Okay, so political instability means the political environment of the country is unstable. So this causes inflation, which in turn reduces the returns of the investor, even though his companies are not directly involved in politics. Political instability causes inflation, which reduces his returns.
Is it only inflation?
No. There's economic decline. And
all right, so I'll give you 2 out of 3. So we know that political instability causes currency depreciation, right? There is also inflation, as you said. It also leads to the investor confidence becomes very low, right? And also interest rate goes up, isn't it? Yeah. So all these things, and so that will definitely affect and hurt the company's valuation, right? Okay. Adisadel. Kojo wants exposure to the banking sector, but doesn't know how to pick individual bank stocks. Why might an equity mutual fund be a better option for him?
Okay, so Kojo here has no idea about the stocks to pick. So when he invests in mutual funds, he's not the one going to manage the portfolio. It's a professional fund manager who is going to manage the portfolio for him. So he has no problem with that. Yes, and it's not highly risky because, okay, there might be risks, but he's not going to be concerned about how to manage the stocks.
I'll give you 2 out of 3. Now, the fact is that, yes, when you invest in mutual fund, whoever is going to manage the fund for you would diversify the fund. So the risk inherent in mutual fund becomes low, isn't it? Yes, and you have a professional analyst who analyze where the fund needs to be invested, isn't it? So I was expecting you to talk about the diversification of the mutual fund aspect, which reduces the inherent risk in terms of the company-specific risk, right? Okay. Mawuko girls. What is income elasticity of demand?
Income elasticity of demand is the degree of responsiveness of changing income of a commodity to the change. Income elasticity of demand. Income elasticity of demand is the degree of responsiveness of consumers. Is the degree of responsiveness of a change in income to a change in quantity demanded. Is the degree of responsiveness of a change in quantity to a change in income of a commodity.
You have all come far, and I expect that when you want to answer a question, just calm down. Is that okay? Just be calm. Okay? All right. So I'll give you 2 out of 3. Yes. You can see the element of exchange, the element of. Yeah, so you could see an element of changes in consumers' income there, and then also demand. So we should have said that income elasticity of demand measures how quantity demanded changes with consumer income, right? So a percentage change in quantity over a percentage change in what? Income, right? All right. Wesley grammar. Why does living longer than expected create one of the biggest risks in retirement planning, even for disciplined savers?
Living longer. One person can plan that maybe he will live for a number of years, let's say 50. So he plans his investments and his financials to that 50 years. But if he outlives that 50 years, he becomes stranded in the sense that he doesn't have money to cater for the number of years he has left. Even for experienced investors, this is a problem because no one knows how long they will live. So when they plan their investment to a specific time period, it can happen that they might outlive that
Correct
time.
for 3 points.
Elasticity of demand refers to the degree of responsiveness of a change in price is the degree of responsiveness of the change in quantity demanded as a result of a change in price. Is the degree of
elasticity, the responsiveness of quantity demanded in relation to the price of a related good. So, for example, if commodity X and Y are substitutes, an increase in the price of commodity X will lead to an increase in the demand for commodity Y, all other things being equal. Also, if there's a decrease, or just in case they are complements, an increase in the price of commodity X will increase the price of commodity Y too. Quantity demand will increase the quantity.
Correct for 3 points. Adisadel. Explain discretionary fiscal policy.
Hello. So when we talk about discretionary fiscal policies, they are the policies made by governments in order to maintain the economy and also check inflations through taxations, subsidies, and also managing its expenditure. I said fiscal policies are policies. Okay, discretionary fiscal policies are policies implemented by the government in order to regulate the economy through taxations, provisions of subsidies, and also managing its expenditures.
Any other? Bonus to.
So this discretionary fiscal policy is a policy aimed at combating inflation. This is where government spending and taxation affects the money supply in the economy.
Yeah, bonus. All right. All right. So that's one. Bonus is one, right? All right. But no, I'm saying bonus is one, isn't it? But what did you say? Because it's wrong. So yes.
Minus one.
Mawuko girl, your major question. Define crowding out in fiscal policy. Crowding out in fiscal policy.
So crowding out is where through government spending and taxation, it reduces inflation. It is when through government spending and taxation, inflation levels decrease.
No. Bonus. So a crowding out occurs when government borrowing raises interest rates. So when government cannot to borrow in an economy excessively, right? Interest rate increases. And that will lead to a reduction in private investment. So it means that government has outcrowded investment in terms of the economy. So private individuals will not be able to invest as much as they ought to do. Wesley Grammar. Explain lease versus buy decision for assets.
Okay. So a lease is a contract where a person buys and he rents an asset to another party to use it for a period of time against periodical lease payment. and a buy.
Yes, bonus.
A lease occurs when a firm has an asset and is dormant. So the firm rents it out at a fee. Whilst buyback asset is when a firm acquires resources into the company.
Come again.
A lease occurs when a firm has an asset which is dormant. So the firm rents it out at a fee. Whilst a buyback asset is when a firm acquires resources into a company.
Wrong, you are wrong. So, it says explain lease versus buy decision for assets. No, it's bonus, so yes. 4, okay.
Okay, so we delete when the asset is given out. The one receiving the asset pays it later. But then with the buyback, after using it, he later purchases the asset. Later purchases the item, the asset back.
All right, so it's wrong. I said explain lease versus buy decision. I didn't say buyback. I didn't use the word buyback. I said buy decision. So these are two separate things. I don't know where people have heard the buyback from when you are using. So with leases, it offers a lower upfront cost, flexibility to pay, right? But when it comes to the buy decision, it provides equity build-up and asset control. Because even with the lease, you are not the owner of it, right? So at the end of the day, you need to, the owner will still come back for it. But for the buy decision, there is asset control, even though ratio dividend policy.
So the constant dividend payout ratio policy directs a firm on the investments to make. Dividend policy. It regulates a firm on how to pay constant dividends back to its shareholders.
Wrong. Yes, Adisadel.
So constant payout dividend policy ratio is when the management decides to pay the shareholders a dividend at a fixed percentage or a constant percentage of their dividend, the total dividend earned.
Correct for a bonus. So, your major question, Adisadel. Explain stock dividends versus cash dividends.
Okay, so stock dividends are when the shareholder is being given his dividend in form of stocks, whilst cash dividend is when a shareholder is being paid his dividend in a cash form, or yes, in a liquid form or cash form.
Correct for 3 points. Mawuko girls. What is a hostile takeover in acquisition?
A hostile takeover occurs when the target management doesn't agree to the acquisition of his firm. Or hostile takeover is when the firm that the other company wants to take over does not agree to the terms of the other firm, of the target firm.
All right, I'll give you 2 out of 3. So a hostile takeover targets a company against managers' wishes, often through tender offers or proxy fights. So the defense that they will have to use will include poison pills or white knights to protect control. Wesley Grammar. Define synergistic effects in measures. Define synergistic effects in measures. Wesley Grammar. Yes, Mawuko girls for bonus.
A synergistic effect occurs when the value of a firm's acquired together is greater than the sum of the individual firms.
A synergistic effect creates value greater than the sum. Whether it is through economies of scale, cross-selling, or diversification. So your major question. What is asset allocation in personal investment? But you answered the bonus. So yes, you answered the bonus question, isn't it? Yeah. So it should go to Aggrey. Okay, Aggrey. What is asset allocation in personal investment?
So asset allocation refers to how an individual allocates his income across investment instruments to achieve his financial goals and reduce risk.
All right, so I'll give you 3. I'll give you the 3 points. Adisadel, explain the efficient market hypothesis. Efficient market hypothesis.
So efficient market hypothesis refers to the gathering of quality information from the financial market in order to help and evaluating it in order to help an investor to invest in a stock or yes.
Yes, bonus.
So an effective market hypothesis deals with the analysis, research of the market to make to give the investor good advice.
So what I was looking out for has to do with the prices. So an efficient market hypothesis states that prices reflect all available information. So here we are talking about. So I was expecting you to talk about prices. Information, which kind of information are we talking about? Right? Right. So whose major question? Mawuko. Explain options in commodity trading.
Options is one of the methods used to hedge against volatility in the markets. It involves using derivatives to reduce the impact of risks in the market.
Bonus. So options give the right, which is not an obligation, to either buy or sell commodities at a strike price. Whose major question? Wesley Grammar. What is dematerialization in securities?
Dematerialization is when the certificate of a security is dissolved in order to allow the transfer of the security or title transfer ownership of the security in the investment market.
Come again.
What was the question again? Dematerialization refers to the dissolving of the certificate of a security in order to allow transfer of title ownership of a security from one investor to another.
I'll give you 2 out of 3. But it converts physical certificates to electronic records. Okay? Yeah. I give you 2 out of 3 because of the transfer, because once you are able to convert physical certificates to electronic one, it eases out. There is an ease on transfer, and that also reduces theft or loss, right? Yeah. Aggrey Memorial. Define dark pools in exchanges.
Do you remember?
Dark pools in exchanges.
Try writing it. Dark pools in exchanges. Did he say dark pools in exchanges? I don't remember, but let me try. So dark pools in exchanges refer to how securities and money are transferred well in a financial environment.
Bonus.
So dark pools occurs when debtors make payments early when buying securities.
No. All right. Adisadel, your major question. What is stewardship theory in governance? What is stewardship theory in governance?
The stewardship theory in governance is like when the government looks after
bonus. Wesley Grammar.
The stewardship theory in governance is a theory which shows that managers and board of directors owe a fiduciary duty to shareholders and hence must act in the best interest of shareholders.
Mawuko girls, your major question. What is sustainable corporate governance?
A sustainable corporate governance is where the board of directors and the managers are able to ensure that there is efficient management of the firm to avoid any scandals that may occur.
Bonus.
Sustainable.
Please allow them to answer. Is that okay?
Sustainable corporate governance refers of ensuring that efficiently managed through practices like accountability, transparency, disclosure, and integrity in order to maximize shareholder welfare.
Have you heard of ESG in corporate governance? What is ESG? To any of you, what is ESG? What is ESG? To any of you, what is ESG? Environmental, social, and governance, isn't it? So when you integrate these things in making decisions and making sure that it happens, then that is what we call sustainable corporate governance, right? Wesley Grammar, your major question. What is exchange rate determination?
Exchange rate determination refers to a foreign currency or how much of a domestic currency is needed to buy a foreign currency.
Two out of three. And this is the last question for this round. And that goes to Aggrey Memorial. Explain the quantity theory of money.
Okay, so the quantity theory of money, this describes how the quantity theory of money describes the volume of money that should be in circulation, either to reduce inflation, increase economic growth, or promote economic growth.
Correct for 3 points. So that brings us to the end of round one. At the end of round 1, these are the scores. Aggrey Memorial School, 13 points. Wesley Grammar, 13 points. Adisadel College, 12 points. And then Mawuko Girls, 11 points. So we move to round 2, which is a case study analysis. So round 2 evaluates participants' ability to interpret and analyze real-life financial and investment situations. This round focuses on critical thinking, data interpretation, and practical decision-making. Contestants must apply financial concepts, assess information logically, and present well-reasoned conclusion based on the case provided. So, starting from Adisadel, question 1 for round 2. AMA places a buy order for MTN shares, but it remains pending for 2 days. The question is, what market condition causes this delay? At this round, there are no bonus.
So the condition that mix up districts is market risks.
No. Incorrect. Mawuko Girls. Ghana Stock Exchange Composite Index drops 4% in a week, although no major company released bad news. What could explain this general decline?
This could be due to inflation when their funds reduce.
All right. Wesley Grammar. Yao thinks he can walk into the Ghana Stock Exchange building and buy shares directly. Why is he wrong?
Yao is wrong because he's not licensed by the Securities and Exchange Commission to buy and sell shares on the Ghana Stock Exchange. He must act through an intermediary.
Correct for 3 points. For Mawuko. Or they are wrong. It's incorrect. Please, I don't use the word wrong. It's incorrect. Yeah, thank you.
Okay.
Aggrey Memorial. A listed company delays publishing its audited report. Why is this a threat to market integrity?
This prevents investors and stockbrokers from making informed decisions. If they don't publish information early, if they don't publish the information early or accurate information, investors and stockbrokers won't be able to make informed decisions.
Correct. For 3 points. Adisadel. A company issues right shares at a discount to current market price. Why would the company choose this?
Okay. So the company decided to issue shares at a current price discount rate because they wanted the shareholders to be attracted so that they can buy their shares in order to raise capital for their company.
I'll give you 2 out of 3. So it is to raise capital cheaply and while rewarding existing shareholders. Mawuko girls. A listed company's board lacks independence. How does this affect investors?
Investors' confidence will reduce in the market since the board, it lacks board independence. I mean, the board is not able to make informed decisions, or the shareholders are not able to take part in the decision making in the company, and also reduce the performance of the company.
So I'll give you 2 out of 3 because it raises higher risk because of poor oversight, and also there will be a potential misconduct. Wesley grammar. A broker discovers that commission rates have been revised, but still quotes the old rate to a client. It was not announced officially in the firm. Is this ethical? Why?
This is not ethical because the broker, knowing that the commission rates have changed, decided to still use the old commission rate, and this destroys the integrity of the capital market because investors will lose trust in the capital market because of what the broker has done.
I'll give you 2 out of 3. Aggrey Memorial. A research analyst avoid issuing a negative report on a major client for fear of losing business. What ethical standard is being violated?
Objectivity. He is supposed to publicize accurate information irrespective of business relationship.
Correct for 3 points. So it's independence and objectivity. Adisadel. A fund manager allocates all oversubscribed subscribed IPO shares to his personal account and leaves none for client funds. What should have been done?
Okay, so the fund manager should have made someone do the allocation instead of him doing it by himself with his own self-interest.
Correct for 3 points. Mawuko girls. A portfolio manager overhears a company's CFO discussing a new revenue-boosting product not yet disclosed publicly and immediately buys shares and immediately buy shares, hot violation occurs.
What the portfolio manager did was insider trading because he acted
Correct
on
for 3
non-market.
points. Wesley Grammar. A client asks an advisor to recommend high-risk bonds, but the risk assessment shows the client is conservative. What must the advisor do?
Since the client's risk is conservative, the financial advisor has to advise the investor to withdraw from trying to invest in high-risk investments and rather invest in low or moderate risk investments.
Correct for 3 points. Aggrey Memorial. A supervisor is aware that a junior staff member repeatedly bypasses compliance procedures, but does nothing. What ethical duty is breached?
Please, can you come over?
You've heard the question. You didn't hear that. You are two.
Okay, so the manager.
All right, so you listen.
The manager.
You listen, and this is to all of you. That's what I said from the beginning. You should pay hot attention. I'll not read question twice going forward. Is that okay? All right. A supervisor is aware that a junior staff member repeatedly bypasses compliance procedures but does nothing. What ethical duty is breached?
He is supposed to ensure that his subordinate goes by all the rules and regulations in the company. So
Correct.
if...
Correct for 3 points. So duty to supervise and ensure compliance with laws and standards. Adisadel. A professional receives a personal gift from a client during negotiations without informing his employer. Why is this a problem?
So this is unethical because an employer is not supposed to take any gift or personal money from a client without the employer's consent, because it breaches the integrity of the firm or the corporation.
So I'll give you 2 out of 3. Because it creates conflict of what? Interest. Mawuko girls. A firm delays sending updated investment reports because the manager wants to finish polishing the numbers. What duty is violated?
The duty violated here is transparency. Since the manager wants to change figures in the reports.
All right, so I'll give you 2 out of 3. So, timeliness, accuracy, and complete disclosure. Wesley Grammar. A fund manager recommends a product without evaluating its impact. A fund manager recommends a product without evaluating its impact on the client's total portfolio, which fiduciary principle is breached?
The fund manager does not conduct proper research in order to provide his clients with beneficial and efficient information that will help him invest wisely and properly. Hence, it might expose the client to a whole lot of risks like market risk, liquidity risk, and interest rate risk.
You see, the question says, which fiduciary principle is breached? Not to explain what should or ought to be done. You understand? Right?
Yes.
Right. So, you won't get the marks. Aggrey Memorial. An investment advisor shares confidential client details with a friend just for advice. Why is this unethical?
It is wrong because it is insider trading and it's unfair and against ethical rules. His friend will have an advantage over the public. That is unfair. He has also disclosed non-public information, which is wrong.
All right. I'm obliged to give you one. You see, because of the last word, not public information, because what that person does violates confidentiality. So if somebody confides in you, there's no need for you to go and inform someone else for an advice. Right? So I'll give you 1 out of 3. Adisadel. A controlling shareholder sells company's assets to a related party at below market price. Which governance failure is this?
Breaches the integrity between the contracts, the clients, and the investment manager.
Your time is saving up. Yes, but even the answer is incorrect.
Is that question that we can answer? Don't bring it up. The question is we can't answer.
Mawuko girls. A board approves a major merger without providing shareholders enough information. Which governance principle is violated?
The governance breach here is the non-disclosure of information to the shareholders.
Correct for 3 points. Wesley Grammar. The CEO also chairs the board and heads the remuneration committee. Why is this problematic?
This is problematic because, according to the Cadbury report, the CEO cannot have any additional, he cannot be the same person as the managing director or cannot have any other duty because it will affect his primary goals or his primary duties towards the organization.
No, it's incorrect. Aggrey Memorial. Shareholders attend an annual general meeting but are denied the right to vote on amendments to company bylaws. Which right is ignored?
Shareholder voting right is ignored. The shareholders' voting rights are ignored at the annual general meeting. This is wrong.
Right, so I'll give you 2 out of 3. It's shareholders voting and participation. They have the right to participate. So it's not just about them voting. They have the right to participate in the decision making. So 2 out of 3. Adisadel. A board fails to question the CEO on repeated losses. Which responsibility are they neglecting?
Okay, so they are neglecting accountability. They are not asking the board to give accounts on their operations.
Right. 3 points. So oversight and accountability of management. Mawuko girls. A director uses insider information to buy shares before a major announcement. What governance failure is this?
The governance failure here is the employee acting on non-public material information.
So I'll give you 2 out of 3 because because it is not a public information. So they are abusing insider information, right? Wesley Grammar. A board fails to implement internal controls leading to fraud. What governance responsibility was ignored?
The failure of the board to implement proper internal control measures.
Correct for 3 points. Aggrey Memorial. Employees discovered that related party transactions are common but never disclosed. What governance principle is missing?
Transparency. Transparency and fairness.
No. It's accountability and protection of minority shareholders. Adisadel. A company with cash shortages delays payments to suppliers to finance daily operations. Which working capital component is affected?
the company's current assets. The component of the working capital affected is the current asset of the company.
No, that's incorrect. It's accounts payable. Mawuko girls, a firm finances long-term assets with short-term bank overdrafts. Why is this risky?
It is risky because since it's an overdraft, they might not be able to pay up the debts they will occur. In case of any market fluctuations, that might occur.
It's incorrect. Wesley Grammar. A project has a positive NPV, but a low IRR. Should the firm accept it? If yes, why? If no, why?
Yes, because when evaluating a project using MPV and IRR, you focus more on the NPV because because NPV satisfies the optimal investment decision rule, whilst IRR can give many answers and does not satisfy the optimal investment decision rule.
I'll give you the 3 points. Aggrey. A company increases its debt believing it will reduce WACC, WACC. You know what is WACC? When is this true?
You didn't hear the question.
Yes, he should.
Adisadel, your major question. A business with highly... No bonus. Yes, I said major question. That's all. It's up to her. All right, thank you. So that's the end of round 2.
Ladies and gentlemen,
please, I heard there was a protest in terms of round 1 when the question was about it is lease versus. So if you just give a definition of lease without definition of the buying of the assets, you have not, because the two must work hand in hand. So if you just give just one definition without the definition of the other, it is wrong. It is not about 1 point. It's wrong. Wrong is wrong. Officer, except something versus something. Do you understand it? If you understand that, I am the quiz master. Aggrey Memorial, 12 points. Mawuko Girls 12 points. Adisadel College 10 points. So when you add round 1 and round 2, Wesley Grammar 27 points, Aggrey Memorial 25 points, Mawuko Girls 23 points, and then Adisadel 22 points. So for round 3, it's a stock simulation. So the stock simulation round gives students hands-on experience in investing by stimulating real-world stock market scenarios. Participants manage virtual portfolios, analyze financial data, and make strategic investment decisions in a risk-free environment. The objective of this round is to build financial literacy and understanding of stock markets, develop analytical and critical thinking skills, encourage strategic decision-making and risk management, foster teamwork, healthy competition, and confidence in investing, inspire a long-term investment mindset among young investors. So this round bridges theory and practice, preparing students to navigate financial markets and make informed investment choices confidently. So for round 3, it is stimulation.
So if you have okay, so contestants, this is what you are supposed to do. First, create an account using your school's name. are set now. So from our competition leaderboard, we can see Adisadel, Aggrey, Mawuko girls, and MSG. So once the market is opened, you have 15 minutes to trade. So your time starts now. So you can start trading. Okay, so that was a great session. So we'll hear from our contestants. So we are going to start from Adisadel. How was the contest? How did you see the simulation?
Okay, so I'll say it was okay, but just that we weren't lucky.
Mawuko girls, can we hear from you?
It was competitive, but we are hoping for the best.
The grammar, can we hear from you?
We tried our best.
Aggrey.
We hope for the best. It went well.
All right, thank you very much. Over to you.
Adisadel 0. Wesley Grammar 4 points. Aggrey Memorial 7 points. Mawuko Girls 10 points. So, round four, objective of the investment advisory session. So the investment advisory session aims to equip students with practical financial knowledge, critical thinking, and investment skills. By exploring real-world investment scenarios, participants will learn to make informed financial decisions, understand savings and investment principles, evaluate risk and returns, and develop strategies to grow their wealth. This session prepares students to confidently participate in the NIQ competition while fostering financial literacy and long-term money management habits. All right, so we start with Adisadel. All right. So we are starting with Adisadel. So in all, the total for round 3, when you add all from each round, Adisadel College 22 points. Wesley Grammar 31 points. Aggrey Memorial, 32 points. And then Mawuko Girls, 33 points. Yeah, Adisadel.
Hello. 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 Okay, so good evening. I am Christopher from Black and White Investments. So before I start my presentation, I'd like to pose a question to all of you. So my question is, how would you feel if your green portfolio suddenly starts to decline? You'll be depressed, right? It is for this reason that every investor, regardless of the net worth of his portfolio, must have the required information to be able to mitigate risks. So here's our client, Mr. Kwesi Arthur, a business owner with an investment portfolio worth about 500,000 Ghana cedis on the Ghana Stock Exchange, government securities, and a small portion of offshore investments. Offshore investments refers to investing in shares outside your home country. So from our conversation and interaction with Mr. Kwesi Arthur, we realized that his investment portfolio is exposed to market volatility, interest rate changes, and CD depreciation.
Okay, so now imagine this. Kwesi Arthur wakes up one early morning and picks up his phone, and suddenly he realizes that his investment portfolio of 500,000 cedis has dropped by 87,000 cedis. And that 87,000 cedis is gone. So now you can realize that interest rates are jumping, the cedi is sliding, and Kwesi Arthur's business expansion plan is under a threat. This is not a nightmare. It's just a Monday morning market system. It's just a Monday morning market system problem if you are not protected on the market. If you are not protected on the market. So this is a popular Spanish saying, "Me vale prevenir que lamentar," which means prevention is better than cure. So that's why we, the Black and White Investment, are here to provide some remedies for Kwesi Arthur to help him with his investment ideas. So, judges, fellow students, be with me as I guide you through some strategies that will help you know that investment is not for the smartest who can go for the most risk, but it's just for the one who knows how to control it. So we start by hedging unexpected stock market declines. One, diversification. You cannot just concentrate all your eggs in one basket. So in this case, Kwesi Arthur has to diversify his asset classes he has to diversify his assets into classes like treasury bills, mutual fund, and others. And also, he has to set a stop loss on this. This is where Kwesi Arthur has to set an automatic order so that in case his stock is not performing well, it will automatically source itself to avoid extra losses which he cannot afford. And also, he has to switch to dividend-paying stocks. In this case, Kwesi Arthur has to go into the market to look for big companies that are performing well, like MTN and others. And also, he's concerned about interest rate fluctuation. So you are going to give him some strategies that he will hedge against these interest rate fluctuations. One, he has to ladder his bonds maturities. In this case, Kwesi goes for bonds that has different maturity dates, so that in case of any interest rate fluctuation, it will not affect all his investment plans. And also, he has to shift to short-term bonds. Shifting to short-term bonds means he has to go into bonds that mature shortly, within a short period, than going to long-term that when there was an inflation situation, it will affect him and cause more losses to his investment plan.
So I'm here to continue on some practical ways of hedging against the cedi depreciation. Now, the first one is to hold USD-denominated assets. This is a simple and effective way. Of hedging against the cedi depreciation. It is simply investing in assets using the US dollar instead of the Ghanaian cedis. Now, this is going to help in such a way that when the cedi loses value against the US dollar, the value of your portfolio is going to increase, which will help preserve your wealth and subsequently maintaining your purchasing power. And you can also invest in gold-backed products. Now, gold is globally recognized as a store in value, and its price is denominated in strong currencies like the euro, Great British pound, and the US dollar. So when the cedi weakens, the value of your gold is going to increase in terms of the Ghanaian cedi. And you can also use multi-currency investment account. A multi-currency investment account allows you to hold and invest in some multiple currencies like the euro, Great British pound, and the US dollar, all in the same account. Now, this will help because any reduction or depreciation in the value of the cedi will mean an increase in the value of your portfolio. And we move on to hedging against liquidity risk. The first way is to invest in treasury bills. This is because it is flexible and highly liquid. And when I say highly liquid, I mean it can easily be converted into cash without a loss or reduction in its value. And opening a business account is also going to help. Opening a savings account is also going to help because savings yields little to no returns, which means the risk associated with it is little or no at all. So in the event of an emergency, all he can do is just withdraw his money. And avoid locking funds into long-term investment. This is because with long-term investments, your money has been locked up, so any investment in the stock market, any opportunity in the stock market is going to go by. And in some emergencies too, you need quick access to immediate cash. And by locking up all your funds in long-term investment, you can have access to that liquidity.
Turning our attention to hedging sector-specific risks, we first recommended or we told Kwesi to invest in mutual funds. This is because mutual funds is a pool of diversified stocks and they are managed by professionals. Secondly, we told him to reduce overexposure to only one sector. This helps reduce the impact of risks from poor performing industries. We also told him to track the GSE sector performance trends. This helps to detect early market losses and reduce risks. Overall, implementing these hedging strategies will allow Kwesi to better withstand uncertainty in the financial market while keeping his portfolio aligned with long-term objectives. By proactively managing risks rather than reacting to it after losses occur, Kwesi can preserve capital, protect business operations, and maintain steady financial growth, even in periods of volatility. The goal is not to eliminate risks entirely, but to control it in a way that ensures stability, confidence, and resilience in Ghana's dynamic investment environment. This has been Black and White Investment, and we thank you for your attention and time.
Yeah, now the turn of Mawuko.
Good evening, our noble quiz master, coaches present, ladies and gentlemen. I am Amedo Dokas, and I'm here with Afeku Francisca, Felicity Sefenu, Alokachu Esinu, and Pogo Angela. And we are the investment queens from E.PC Mawuko Girls Senior High School. In a world where market runs faster than predictions, hedging reminds us not to chase after returns, but protect them. So today, we are here to present to you practical ways in which we are going to show our client, Ms. Mawuko Mayo, to hedge against her 500,000 portfolio in order to build resilience against market shocks. Our client, Ms. Mawuko Mayo, is a business owner. Our client, Ms. Mawuko Mayo, is a business owner who has 500,000 Ghana cedis in her investment portfolio and has invested in the stock exchange market and offshore investment. Go again. During our discussions, we identified her rates, of which she is concerned with. Thus, the stock market declines, liquidity shocks, her stock market declines, liquidity rates, interest rate fluctuations, the sector-specific rates, and also the CD depreciation, I'll hand over to my sister to brief us more.
Okay, thank you for this opportunity. Moving on, we address the problem of stock market declines. Stock market declines comes as a result of stock market prices, which changes unexpectedly. In that, we had to introduce government securities. Our client, Ms. Mawuko Mayo, we introduced her to treasury bills with maturity horizon less than 1 year in order to access short-term liquidity capital. Also, we introduced her to gold exchange traded funds. Gold exchange traded funds are also funds where the company holds physical gold, but sees to it that investors acquire securities in order to prove that they own part of the physical gold. Also, we introduced her to defensive stocks. These are rooted companies in the stock exchange market. Despite market volatility, her CD currency will still be safe. Again, we hedged against interest rate fluctuations. We were able to know that if this prevailing situations continued in her business, stock prices may disturb. In that, we knew that when interest rate price rises, her bond prices will fall. And also, when interest rate falls, her bond prices will increase. What then did we do? We introduced an investing strategy known as the laddering. We spread her investment across various bond sectors with maturity ranging from 1 to 5 years. Also, we introduced her to short-term securities, which reduces long-term bond and increases treasury bills and notes up to 3 years. We also addressed the problem of we hedged against CD depreciation. CD depreciation has to do with using more of the CD currency to exchange foreign currencies such as the US dollar, the British pounds, and also the Japanese yen. We had to hedge. In that, we introduced her to foreign USD investment portfolios. We also opened foreign currency accounts in local branches so that despite market fluctuations, her CD will also be safe. We hedge against liquidity stocks. As we all know, liquidity risk arises when assets cannot be easily converted into cash or bank equivalent without any significant loss. What then did we do? We introduced her as the NS to money market funds or unit trust because they can provide quick liquidity capital to her business in times of needs. We also introduced her to the line of credit. The line of credit is also a non-liquid instrument. One may ask, what does the line of credit mostly do? This is where the securities which you have acquired in the company is used to serve as a collateral before any other forms of claims can be made without any form of application. We finally hedged against sector-specific risk in that we had our intermarket diversification where we spread her portfolio worth 500,000 across sectors such as manufacturing, consumer goods, insurance, and mining in order to mitigate risk. Also, we introduced her to offshore geographic diversification, which is also known as global funds. We wanted her to have the experience of investing across other continents or countries. So we introduced her to global technology, pharmaceuticals, and the others. At the end of our investment analysis, this is how my client, Ms. Mawuko, portfolio will look like, consisting of treasury bills, treasury notes, and the others. Now, we introduced 20% to treasury bills because, as we all know, treasury bills is a money market instrument which provides short-term liquidities within the shortest period of time. Also, we allocated 20% to defensive stocks or equities. Defensive stocks or equities because during market fluctuations, she will still have enough money to retrieve from the company in which she's investing in. We further introduced her to offshore investment. Offshore investment because now her shares which she has invested into the various companies would be translated into different currencies, as I mentioned earlier, like the US dollar and also the pounds, the British pounds. This will also sum up her portfolio of 500,000 consistently. With the rest, which was allocated by 10%, they all provide short-term liquidity to her. In conclusion, I would say Ms. Mawuko is on the right path, not just because we came to her rescue, but because we advised her by using strategies such as diversification, currency hedging, and liquidity buffers. At the end, we ensure resilience in stock market volatility. Thank you very much for this presentation.
Good day, ladies and gentlemen. I go by the name Rose Nanaya Amponsa, and I'm here with my co-investment analyst, Kelvin and Nomo, and we are the Wesleyan investors from Wesley Grammar School. So now, a quick question, audience. How many of us get worried when currency depreciates and then stock price fluctuates? And you can all attest to the fact that in the previous years, our currency depreciated and there was a sudden increase in the price of goods and services. So this is exactly what our client is facing. So he's a business owner with about 500,000 Ghana cedis, invested in government securities, shares, and a little bit of foreign assets. So all of a sudden, he realized that the market has become unstable. The way stock price fluctuations and then currency depreciation, interest rates were changing. So he's finding ways and means to protect his money. So in short, all what our clients need is hedging, ways to protect his investments against this risk. So today, our responsibility as investment advisors from Wesley Grammar today is to provide practical, accessible, and cost-effective hedging solutions to our clients. So now we conducted an investment analysis, and with our portfolio structure analysis, the client's 500,000 Ghana cedis portfolio is a mixed, growth-oriented portfolio combining local equity, local fixed income, and foreign exposure. So these are some of the asset classes and implications for risk or return. So the first type of asset class I would like to talk about is the GSE stocks or equity. So its implication for risk or return is to provide potential for high capital appreciation and dividend income. And the second asset class I would like to talk about is the Ghanaian government securities, also known as the fixed income. So these are safer investments like the treasury bills and then bonds. So it provides steady returns and then makes the portfolio stable. And the last asset class I would like to talk about is the offshore investment or the foreign currency. As the name implies, foreign currency. So these are investments outside Ghana, usually in the foreign currencies. So it provides currency diversification. What it means is that you can easily spread your money or your currencies across different investment options to reduce risk. So now, we listed some risks that our client is prone to face, or some risks that our client is exposed to. And the first risk I would like to talk about is the systematic risk or the market risk. So now someone might ask, what is the systematic risk or the market risk? So the systematic risk refers to the risk associated with interest rates, exchange rates, commodity prices, and others. And second risk I would like to talk about is the interest rate risk, also known as the fixed income risk. So with the interest rate risk, it's faced when there are fluctuations in interest rates, which leads to the high cost of borrowing. So our client needs strategies like bond laddering to continuously reset a portion of their investment to prevailing, potentially higher interest rates, thereby reducing the portfolio duration risk. The third risk is the foreign exchange risk, also known as the currency risk. And the last risk I would like to talk about is the liquidity risk. So what is liquidity risk? Liquidity risk is faced when one cannot easily convert his assets into cash. So let's say our client's cash reserve is insufficient. That means that he'll be forced to sell his stocks or bonds at potentially unfavorable prices. So there is a need for our client to be dedicated and high liquid emergency funds, such as the 91-day treasury bills or the money market funds. So in conclusion to what I am saying, or to summarize everything I said, the investment analysis determines that the primary goal is not to chase maximum returns, but to implement accessible, cost-effective hedging techniques to protect the 500,000 Ghana cedis capital from high volatility in specific market shocks. So at this point, I would like to hand it over to my co-partner, Kelvin, to talk to you about some strategies we proposed for our clients.
Thank you very much. Since our client is more concerned about a drastic fall in his portfolio value, we propose 3 hedging strategies of which he can follow to prevent the likely risks he can face in the near future. So for the first strategy, if our client is likely to face unexpected stock market declines, we advise him that he should diversify his portfolio, thus increasing the allocation of low correlation assets. This will help our client to rebalance his portfolio and also increase in the proportion of Ghanaian government securities such as T-bills. And also based on our client's portfolio structure, we advise him to allocate more of his investment into defensive stock. That's utility companies that have less sensitive to economic cycles than cyclical stocks. And also for strategy 2, if our client is to face interest rate fluctuation affecting bond price and cedi depreciation affecting foreign currency, we advise him that for the interest rate fluctuation affecting bond price, we advise him that instead of him holding all his government securities at the same maturity days, that's 5 years bond, he can spread them across multiple maturity days, that's 1 year T-bill, 2 year note, and 5 years bond. And also, for the cedi depreciation, we advise our client that he should ensure that small portion of his offshore investment, that's his foreign investment, is being kept truly small and appropriate for the risk tolerance. And also, having securities such as cedi denominant and GSE stock will serve as a natural hedge for our client to act against cedi depreciation. So we are moving on to the third strategy. If our client is to face liquidity shocks and sector-specific shock, for the liquidity shocks, we advise our client that he should spread his required emergency fund from his investment portfolio. This fund should be in the most liquid and lowest risk investments, such as 1, savings and money account, 2, short-term Ghanaian T-bills. And also, he should ensure that those funds can cover 3 to 6 months of his business and or personal expense. And also, for the sector-specific risk, we advise our client that he should actively seek to balance his GSE stock holdings across diverse and uncorrelated sectors. For instance, if he has a high allocation to banking, he must balance this with 1, mining or resource sector, 2, telecom sector, and 3, manufacturing or industrial sector, with the aim of ensuring that no single sector makes up an overwhelming proportion of its total stock value. At this point, I'll hand the microphone over to my co-presenter.
So, to keep the ball rolling with the client education and guidance, our goal was to equip a Ghanaian SME owner with a Ghana or with 500,000 Ghana cedis portfolio to have a practical and proactive hedging tool to manage local market risks. Through this, we guided her through areas like risk literacy, stock hedging, fixed income hedging, and also currency liquidity. Through this, our key focus was to explain what is market shock. 2, to limit downside losses. 3, to protect capital from shocks, and also to enforce strategy. On our actionable takeaways, we made our client understood that systematic risk requires hedging, not only diversification. And also, we also taught her to establish a segregated emergency fund in high liquid instruments like the 91 street and treasury bills to avoid our clients' enforced asset sales. Now, to our key lesson learned, we could note that liquidity is the best hedge against panic. Secondly, discipline outperforms emotions. And thirdly, defense is active, not passive. Simply diversification is not enough. This is because you must actively implement productive measures like stop-loss orders to hedge against sudden systematic declines or market declines. Now, at the bottom line, to protect our clients' 500,000 portfolio, we must move beyond basic diversification and actively implement specific defensive strategies like the stop-loss orders and bond laundering to shield our clients' capital from sudden market shocks and financial volatility. Thank you.
Honorable Quizmaster, ladies and gentlemen, good evening. My name is Stephen Avo, and I represent the Aggrey Equity Experts. And we are here today to advise our client on a problem he's having. So I would want to push this scenario to you. Imagine you have 500,000 worth in portfolio. You have 500,000 worth in a portfolio, and that's a lot of money, right? So out of nowhere, you start facing lots of problems. One is the stock market starts declining and the CD starts depreciating. So that's a very stressful thing to go through. That's what our client today is facing. His name is Kwame Champong, and he's 24 years old. So I would like to go a little bit deeper into his portfolio. So his portfolio consists of stocks from the Ghana Stock Exchange, government securities, foreign investments or offshore investments, and it's valued at 500,000. And this portfolio is what he uses to manage his business, and he also has a lot of long-term plans for this portfolio. So it is said that once a problem is written down, it is half solved. So we, as an advisory session, actually sat down with Kwame to identify all his problems. So the first problem we identified was unexpected stock market declines, interest rate fluctuations, CD depreciation, liquidity shocks, and sector-specific risk. So after careful consideration of his problems, we decided that hedging will be the best strategy for him to take in solving these problems. So firstly, we need to find out what hedging is. So hedging is simply building protection around one's investments, the same way you get insurance for your car. So the hedging strategies we took for each problem. The first problem I stated was the unexpected stock market decline. So the strategies we put in place were, we advised him to increase allocation to government securities. So for government securities, because they are backed by the government, they are said to be low risk or risk-free. With that in mind, even if the stock market declines or there is a decline in the stock market, he is not affected because of he allocated more of his investments into government securities. Moreover, we advised him to diversify across sectors. So what this simply means is that he's supposed to spread his investments across various sectors in the stock market. So even if there's a decline in a specific stock, that may not necessarily be the case for another. Another problem he faced was the interest rate risk. So with this, we advised him to build a ladder bond structure. With the ladder bond structure, this simply means that he should buy bonds with different maturity dates. So even if there's an interest rate fluctuation, he may be able to use a bond which has already matured to buy new bonds with a higher interest rate. And moreover, we advise him to mix fixed rate and floating rate instruments. For the fixed rate instruments, it simply means we told him to invest into instruments which have fixed rates no matter the interest rate fluctuations. And for the floating rate, it means that even if there's an increase in the market rate or decrease, he may get benefits from that. Another problem we identified was the CD depreciation. For the CD depreciation, we told him to maintain a 5 to 10% of his portfolio in USD assets. If there's a depreciation in the CD in Ghana, it may not affect assets in different currencies or in different countries. That includes the USD assets. And moreover, we advised him to hold a small USD cash buffer for emergencies. This means he should hold a percentage of his investment in the USD currency, which will not affect his risk, which will not affect his portfolio if there's a decline in the CD. From here, I would like to call upon my co-advisor to continue.
Okay, so I am Adom Uwaminsa, and I'm here to continue the presentation. The next risk we identified was liquidity shocks. Now, when we talk about liquidity, this basically refers to the inability of an investor to transform his current assets into ready cash, and there will be a loss in value when he does that. So one of the ways we decided to hedge these risk was, one, to keep 10 to 50% of portfolio in money market funds. Now, when we talk about money market funds, these refer to funds that are of short term and they are very high in liquidity. That means that if any short-term problem arises of which he needs serious cash, he will be able to transform these money market funds easily without any loss in its value. Another hedging strategy we decided to use was to maintain a 3 to 6 month emergency business reserve. With this, there are a lot of uncertainties in life, and we cannot predict them all. So what we can do is to prepare for them. So in this scenario, you can see that if anything happens that might cause him any problems, he might be able to rely on his emergency business reserve to be able to continue his business operations. Okay. The next risk also was sector-specific risk. When we talk about sector-specific risk, this is a risk whereby a sector on the stock exchange does not perform as it was projected to. So many sectors we can identify are telecommunications, mining, agriculture, and so many others. So any one of these sectors can be underperforming, and that is what we refer to as sector-specific risks. Now, one of the hedging strategies we decided to use was to set a maximum 25% exposure to any one sector. With this, it means that any amount that is planning to invest or make a portfolio out of, 25%
should be the limit of what he should invest in one sector, so as to help him reduce the loss that he might receive if that sector underperforms. And who knows, if that happens, there is a possibility that another sector might be overperforming, which will be able to cover the risks that is set here. Okay, so this brings us to what our client Kwame had gained from our advisory session. He said he gained stability, liquidity, diversification, discipline, and risk limit rules. Ladies and gentlemen, this brings us to the end of our presentation. Before I leave the stage, I just want to say one thing. In a volatile market, protection is just as important as profit. Thank you.
All right. Thanks for the presentation. For this round, Adisadel at the 15 points. Because this round is over 20. 15. That's market says 20. The market says 20. So it means I have to do. Yes. Okay. Okay. So let me do that. All right. Okay. Mawuko girls 13.5. Wesley Grammar 10.5. And then Aggrey Memorial 12. So we move on to the last round, which is true or false, and then a riddle. So, question 1. Market risk is called undiversifiable because even a well-diversified portfolio cannot fully escape broad economic shocks. Adisadel.
True.
Correct for 3 points. Mawuko. If interest rates rise sharply, the price of existing fixed coupon bonds will increase to attract new investors.
False.
Correct for 3 points. Holding short-term T-bills, Wesley, is an effective hedge against rising interest rates because their prices adjust more frequently.
True.
True. Correct for 3 points. Aggrey Memorial. Commodity risk only affects companies that directly produce commodities like oil, cocoa, or maize. It's false. Adisadel. Keeping 20 to 30% of a portfolio in USD assets is a valid hedge against CD depreciation.
True.
True. Correct for 3 points. Mawuko. A bond ladder reduces interest rate risk by concentrating all maturities within one short time period.
True.
It's false. Wesley, stop loss limits protect investors by automatically selling a security when its price drops beyond a present threshold.
True.
Correct for 3 points. Aggrey. Diversifying a portfolio across banking, telecoms or telcos, agriculture, and manufacturing helps hedge sector-specific risk.
True.
Very true. Correct for 3 points. Adisadel. Liquidity shocks can be hedged by placing all emergency funds in long-term bonds since they offer higher returns.
False.
False. Correct for 3 points. Mawuko girls. Rebalancing during volatility forces an investor to buy low and sell high, which strengthens long-term portfolio performance.
True.
Very true. Correct for 3 points. The Securities and Exchange Commission of Ghana. So the SEC's core mandate under Act 929, Wesley, is to promote innovation at all costs, even if investor protection is compromised.
False.
False. Correct for 3 points. It's 2 points, so 2. All right. Thank you. Is that? -1 when you get it wrong. Okay. So those who got it wrong, -1. Yeah. Mawuko and Aggrey. All right. So Aggrey. Licensing and supervising fund managers, advisors, and brokers is one of the SEC's main responsibilities. Very true. Correct for 2 points. Adisadel. The SEC does not directly educate the public that The SEC does not directly educate the public. That function belongs only to financial institutions.
False.
It's false. Correct for 2 points. Mawuko girls. The Securities and Exchange Commission approves IPOs, mergers, acquisitions, and takeovers to ensure market integrity.
True.
True. Correct for 2 points. Wesley Grammar. The Ghana Stock Exchange trades equities, but it does not list corporate bonds.
False.
Correct for 2 points. Aggrey. The Ghana fixed income market deals exclusively with equities. Correct for 2 points. So, Adisadel. Radio. Four more. Three more. Okay. Adisadel. Market surveillance by the Securities and Exchange Commission helps prevent insider trading, price manipulation, and fraudulent schemes.
True.
Correct for 2 points. Mawuko girls. The Securities and Exchange Commission cannot issue sanctions or revoke licenses of non-compliant operators.
False.
Correct for 2 points. Wesley Grammar. The warehouse received guidelines 2019 support commodity trading under the GCX by standardizing storage quality.
True.
True. Correct for 2 points. Yes, so your turn, right? The Ghana regulatory framework aligns with IOSCO principles, positioning the market to attract global investors.
True.
True. Correct for 2 points. Adisadel. Under the new Securities Industry Bill 2025, daily fines are introduced to strengthen compliance and deter misconduct.
True.
True. Correct for 2 points. Mawuko girls. The Investor Compensation Fund protects investors against market losses caused by price volatility.
True.
It's false. Wesley Grammar. The GCX helps farmers obtain fair prices by offering transparent commodity trading platforms.
True.
Correct for 2 points. Aggrey Memorial. Increased issuance of government bonds on GFIM has supported major national infrastructure projects? True, correct for 2 points. Adisadel, the Ghana Stock Exchange had 32 listed companies as of 2025, indicating the market is still relatively shallow compared to regional peers.
False.
It's true. As little as Ghana 50 cedis.
True.
True, correct for 2 points. Wesley Grammar. Market depth and liquidity in Ghana are limited partly because of the low number of listed companies.
True.
Correct for 2 points. The last question for the true or false. Low financial literacy has no significant impact on the participation of young people in the capital market.
False.
Correct for 2 points. So we move on to the radio. Radio is also 2 marks. Mawuko. Okay. So this is how it's going to be. So when I start reading and you ring the bell, just on the first clue, and you give me the correct answer, you attract 5 marks. Second clue, 4. And then any other clue, 3. Are we okay? Are we okay? Are we set to go? All right. So you listen. And if I start and you think you just press on the this thing. All right. I am feared when markets rise, ignored when markets fall. Yet, I always stand between your goals and your emotions. I grow when you panic and shrink when you plan. Who am I? Aggrey.
Stock prices.
Incorrect. So you rang it before Wesley? I've not seen it. It didn't show. Yes. It didn't show. It didn't show at all. Yes. Yes, Wesley.
Risk.
Risk. Correct for 3 points. Radio 2. I am the reward for your courage. But I punish those who misunderstand me. I rise when uncertainty grows and fall when confidence returns. Who am I?
Dividend.
No.
Market rate.
No. Yes.
Returns.
Correct for 3 I am please. I am the cheapest insurance you will ever buy. Yet no premium is paid for me. I disappear when you put everything in one basket. Who am I? Yes, Wesley.
Diversification.
Correct. I pretend to protect you by keeping your money still. Yes.
Savings.
No. But so it means that you are out of that is it. Okay. But slowly, quietly, I eat your purchasing power away. Yes. Correct for 4 points. 4, yeah, because that is the second clue. Yeah. 4. I am your first goal, but your last thought. You only remember me when disaster knocks. Without me, your long-term dreams collapse instantly. Yes.
Management.
Is that?
Risk management.
No. Who am I? Yes.
Initial investment.
No. Emergency fund. This has brought them to place. So we have come to the end of Please calm down. We have come to the end of the competition. I think it has been a very educating, interesting competition, which was also very very competitive. I could see that all schools were well prepared for this challenge, and I think it is a good show for the coaches and then the organizers of the program. So whilst we wait for the final score, I would want to give you the total score as at the end of round 4, whilst we wait for the total score. So at the end of round 4, Adisadel had 33 in terms of total. Wesley Grammar 41.5. Aggrey Memorial 44. And then Mawuko Girls 46.5. Now, at the end of round 5, which was very, very competitive, very, very competitive, Wesley Grammar had 23 points. Mawuko Girls had 15. Adisadel had 11. Aggrey Memorial had 11. So at the end of the competition, Adisadel, 44 points. Aggrey Memorial, 55 points. Mawuko Girls, 61.5. And Wesley Grammar SHS, 64.5. So, congratulations to Wesley Grammar. And better luck next time to the other competing schools. See you next year. Thank you.